Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Kauli. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Kauli, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Kauli.
Welcome to Premium Cashflow Podcast. Today I have a very favorite guest of mine, a rock star of investments and someone who's really a who in the investment world. So today I have a founder president of Diamond Equity and Mr. Dan Breslin. Thank you, Dan, for taking time today to join. I appreciate your time today. And welcome to the show. And you want to give a brief background, Dan, about where you started, where you at with your company today?
Yeah, for sure. I appreciate the opportunity to come on and share this time with you and the listeners of the show, Sakar. I got my start. I was in Philadelphia flipping houses since 2006. Before that, nothing really worked. I was a car salesman, would be bouncing around from jobs. So I did pick up sales skills and had a bunch of those entrepreneurial kind of things going along the way. In Philadelphia, it took until 2013, 2014, a lot of trial, a lot of error, the ups and downs of the market, the ups and downs of my personal habits in life during that time. And we finally started to get some traction in Philadelphia, some consistency, and we put together a good team. I looked around. My daughter was living in Chicago up until that point, since early 2000s when she moved out there. So it was always like back and forth on the planes. Being a dad, 1 weekend a month, it's not like having anybody who has kids could probably imagine. It's not like you would, the ideal situation. So in 2014, team on the ground in Philadelphia, that's when I picked up, moved to Chicago, and we started doing business in Chicago, and then we expanded some other markets, but we finally landed on Atlanta, Chicago, and Philadelphia, primarily because we have good teams there, but also they're solid, stable, large enough markets for us to operate the business that we do, which is wholesaling and fixing and flipping houses. We do 200 to 300 deals per year. At any given time, we're in the middle of 75, 80 addresses, which are under contract, owned and being renovated. We refer to those as our REOs, and then waiting to settle. So we might have 25 deals waiting to go to closing that are sold, and we're waiting to capture our profit. As you can imagine, it takes a team of, not including contractors. There's about 16 partners, I think, on the team, and I like to develop not employees, Sakar. For me, my philosophy was more to develop real estate investment partners, if you will. So I like to kind of think of it more like a law firm where people are making partner and we're kind of having ownership in the decisions. People are expected to bring capital to the table when things go wrong, and they share equally in the profits when things go right. So that kind of comprises the business here today.
Wow. You certainly have a lot going on. And it's interesting, the model of your team there, Dan, is I think everybody's probably at an equal level. Everybody's hustling and everybody's equally vested in terms of, hey, we got to make this work, scale this up. And it's impressive that you have that many deals under contract, that much, renovations going on and things like that. Wow. I can imagine. So Dan, speaking about fix and flip and these different markets that you have, how do you go about, sort of picking your sort of best cities to invest, and how do you look for signs in the market that, hey, for example, Philadelphia looks great, and, come Q2, that may not, you may see deals drying out, and then you may have to shift to, let's say, some other market in Ohio or in Georgia for that matter. So how do you look for some signs within the market that you pick your deals at?
For me, it's less about the market and it's more about the people who are working in the market. So when I was in Philadelphia, the reason I invested in Philadelphia is because I lived there. So I could drive to the rehab. I could go buy their paint. I could mow the lawn. I could do whatever I needed to do if I had to get in, roll up my sleeves, and get my hands dirty. And I did early on. I did a lot of that. And I believe that being present in the market for me is a more effective strategy for investment than trying to chase growth in the marketplace. There's typically one requirement for me I see to succeed: a metropolitan area of 5 million people or greater.
Mm-hmm.
So in Baltimore alone, where we went into and failed, we didn't quite have the momentum or the size of the marketplace to really sustain at least our business model at the time. I'm sure you can develop and do enough deals there and succeed. It didn't work for the way our business model was set up at the time. But Philadelphia, Chicago, Atlanta, inside each of those markets, Atlanta is a growth market for anyone around the country listening. There's population moving there. It's pro-jobs. They're attracting a lot of corporate job creation is strong, population is strong, and there's a limited amount of inventory. So it's good for the single family investment market pricing on the rise over the last 5 years. But even in Atlanta, but in Philadelphia and Chicago, there's certain neighborhoods and price points where, like, I prefer to buy, when I do buy single family rentals, I'll keep a couple of them kind of like my own savings account. Just to put the money, aside so it's not losing value in a savings account, literally. But I'll try to buy properties in advance of gentrification. So like areas that have changed over historically have been like trending from lower income, crime infested neighborhoods to becoming more homeowner driven and less landlord and Section 8 kind of driven neighborhoods. Crime disappears. Prices like in Philadelphia, in one area started out, depending on how far back you go. I know guys that bought them for $5,000 and they're worth $500,000 today. I have properties I bought, 2 years ago for $65,000, and I could sell them without having to do any capital increases for like $120,000 in just a period of like 2 to 3 years. If I were to do like renovation complete, top to bottom, I can probably get close to 200,000, maybe more. And when I bought them, Sakar, it felt like I was paying like retail price, like a premium. It was like too much money for me. It's like, I'm used to buying properties. I could like fix them up, flip them, and sell them immediately, like 6 months from now. That's kind of our business model. So like to buy these hotter area gentrification tracts, it's like I had to get a little uncomfortable and pay, in my mind, too much. I mean, it was like market price,
Right. And I actually, there are always those areas, Dan, that you always feel that, geez, compared to what your favorite strategy is or favorite market, sort of the neighborhood is, you sort of gravitate towards better neighborhoods. And of course, you're paying more because obviously those properties are worth more. And that's something personally that has happened to me. We, here in Baltimore area, we own over a couple of hundred rentals mixed between, apartments, single family and townhouses and things like that. And that's one thing I have noticed is that the performance of your portfolio is strongly tied towards, occupancy and cash flow that you resultantly generate. And that occupancy in these neighborhoods is pretty much tied to more has to do with how great the neighborhood is. Of course, your house has to be nice, but of course, sometimes, if you have a great house in a bad neighborhood, you will still experience those turnovers, And I have had that happen like back in the days that used to happen to me. And then, we went on, having houses in safer and much nicer neighborhoods. And suddenly we saw that whole momentum shift. And all we did is just keep on buying in those pricier neighborhoods. As long as the cash flow numbers worked, we were still buying it. And compared to, a lot of other investors, our numbers were probably a little thinner. But then, as they say, the slower you move, but the more consistent you are, your run rate and your average, becomes better. That's what happened to us. And now we're at a point where, out of like a couple of hundred of these houses, I mean, we rarely have like 2 or 3 vacancies, which really is, very minuscule comparatively. So very good. I appreciate you sharing that, Dan. And regarding your fix and flips, how you go about that? Like, meaning, let's say if you are in these different markets and you have teams, like, are there any like specific price points you look for, and how you go about like rehab job, or, what are the like sort of the characteristics that you look in your deals?
So we're recording this right now on March 22nd, 2019. And the stock market tanked like 400 points, I think, earlier today already. So the sky was falling, right? I think just like a lot of people, there's some sense of correction. There's some corporate debt bubbles. I don't feel like the single family space is going to cave like it happened in 2008, 2009. I think that's once in a lifetime low price for single family because we have millennials coming of age where apartments are no longer going to suit them as they marry and they have children a little later than their parents did as a generation, but there's a tide shift working against apartments. That tide shift buying houses, for me, my observation is that they're buying the houses that I'm selling somewhere in a $200,000 to $300,000, maybe $400,000 range, depending on the income, the area, the city. So they're like very, very still good deals, in my opinion, and lower risk than say in a $800, $900 million homes, which were hot a couple years ago for a short period of time, which I think will get hot again. Probably in 10 or 15 years to millennials reach peak earning years and start to do like another level of move up from the apartment to the starter homes now to the $1 million larger 5,000-6,000 square foot homes, maybe even in the suburbs. We'll see a little bit of a trend, in my opinion, later on, 15 years. So I like the price points where I could sell something, renovate it anywhere from, we'll do something, we'll grab it, it will sell for $50,000 after we just do like some moderate upgrades to the kitchen, cleaning it up, painting it, make it habitable. Something maybe we bought for $10,000-$15,000, put like $5,000-$6,000 in, and we sell it for $50,000. For us, it's about somewhat satisfying the client, the seller who came to my company. My company is a direct home buying company. That's how we serve the marketplace, as opposed to just we're an investor. So we're profit driven, yes, but we're also trying to satisfy the market of clients that come to us with their house, their problem situation. We also, obviously, we would flip houses, do the kitchens, baths, things like that. I really don't like to get into jobs where I need to do architectural plans and get the approvals from the city.
Oh, yeah. That gets expensive. Yeah.
Yeah, it's expensive. So I have two risks there. I have one is the risk of the expensive construction. So if $100,000 to $200,000 or $300,000 renovation, which is, I have little friends doing this stuff all over in Chicago, mostly these higher end rehabs, $300,000. A 10% deviation is $30,000, and it could go even, further than 10% deviation.
Absolutely.
The second risk that you would have beside the cost of construction going up would be the time risk. So if I'm going to wait 3 months, 4 months, 6 months for my approvals to even begin, and everybody listening, whether you're doing construction or not, knows it's going to take longer to do a $300,000 reno than a $55,000 renovation.
Absolutely. Those holding costs add up so much, It's
not only the holding costs, but where are the interest rates 18 months from now, Sakar?
Absolutely. Yeah. Couldn't agree with you. And also, Dan, speaking of the deals in these different markets, how do you go about marketing, advertising your services, and also perhaps do you have any insight into how investors can look into sourcing similar deals if someone were to say that, hey, I want to wholesale and fix and flip maybe 50 houses. Do you have any tips for them? How do you go about that?
I think we are in a unique spot that we came online a little while ago, and doing huge volume takes huge money. And Absolutely. You also have to have a huge team who's going to work the influx of leads, because it's not an easy game. Sure. When you're advertising, for direct to seller, our budget's $100,000 in some months plus. So $100,000, $125,000 is not unreasonable. $150,000 in 1 month, maybe in the month of May, in the peak season, is not unrealistic. Right. That money is going to take 3 to 7 months, maybe even longer, to get back through the cycle and come back in the machine.
Absolutely.
So we kind of have, a little bit of a momentum working in our favor, where we're getting calls from letters we sent 8 years ago.
Correct. Awesome.
But what I would say is there's something to be said for hand selecting, finding the right deals and a lower number of deals. So we built this huge team, Sakar, but sometimes it becomes, and I'm grateful and I'm blessed to have all these people in my life and have this thing going. Sure. But sometimes there's a certain weight of running that entire machine and keeping that thing fed. There's a whole lot of people who are expecting.
So there's overhead involved, correct?
Yeah, exactly. Hand selecting the right deals in the right areas and really getting clear on what your investment philosophy is. as a fix and flipper, I think would be key. I also, in my opinion, think that wholesaling is a little bit in trouble. So in 2016, we did more wholesaling than we're doing flips, and we're intentionally driving all of us toward better skill level when it comes to hiring contractors and running construction, because where we saw the hard money coming online, you know, these institutional hard money at really low rates, people are flipping houses for lower rates of return, and the wholesale fees kind of got a little bit crazy. They got a little bit like out of whack. So in 2016, 2017, the wholesale fees were much, much higher, and people were paying like numbers that didn't make as much sense because the market was going up. But we're in a position now in 2019, the market's going to level. It's not going to continue to go up the way that it's been. That's unsustainable.
Right.
We would agree. But now we're going to see that same thing where people have gotten hurt who bought too much money. So now the guys buying the wholesale deals from wholesalers have to pay less money. So where wholesale fees got to $30,000 in a lot of cases, we're seeing a return to $5,000, $6,000, $7,000. And now it's unsustainable too, Sakar, to do the kind of marketing, since there's so much competition. It's $7,000 to $10,000 in marketing to get one deal, but the average fee is $7,000.
Right.
So are you in a position to do 5 break-even deals, and then on the 6th deal you make $17,000 extra from the break-even? Maybe not like the best model. So I think it would be more wise to just target and focus right to flipping houses and being good at the whole, real estate investment deal, as opposed to trying to just come out and do wholesale deals only.
Right. It sounds like, I think as the market shifts, you go from a volume dealer sort of wholesaling a lot of deals to, when the market gets hot, I think you're shifting to saying that, hey, I'm going to probably handpick few deals and still do like limited quantity, but still, make enough profit to sustain. Would that be a correct characterization then?
It is. And like the wholesale deals, the way the splits work in the team, like people on the team are making money and we're offsetting our marketing costs. But yeah, we're really out there, looking for the trophy fish. We're looking for the marlin of a deal we can hang on the wall, like, $70,000 profit deals. So we have to, do 200, 300 deals to find, 15 of those deals throughout the course of a year.
Right. Makes sense. So I have a follow-up question around this in terms of, the volume of business that you did, or rather the correct way to say is this, like over the years, the way you scaled your business, right? So you went from, let's say, one marketplace to a few marketplaces. Now you have systems around, you have a budget around. Would you mind sharing with our listeners, like some of the lessons you have learned along the way, that what things to do, what not to do? That would be something very valuable to listen to.
Yeah, I think I shared and kind of alluded to some of them. So what not to do would be to think like, oh, I know a guy in Houston, Texas. I'm going to just expand to Houston, Texas. Right. Here, it's a hot market in Atlanta. I know some guy on Facebook. I'm going to go in. We're going to do Atlanta. So I think I tried to expand too fast, too soon. We're at a great place right now, and people are probably sitting back, yeah, the guy's in 3 different markets, and, that's what I should probably do too. Right. Maybe if you have the right people in place there, that would work. But we lost a lot of money going into a lot of different markets. So I would not try to expand into too many different markets looking back. I failed in Baltimore. You're successful in Baltimore. You're in Baltimore the way I was in Philly, and that's why I chose Philly. And so it makes sense to start where you are. And unless you're in, a very, very sparsely populated area, I would suggest starting and mastering the deals of some sort in your backyard. There's billionaires who are investing in real estate in Baltimore, just as they are in Chicago and Los Angeles and New York City. Right. Yeah. And so it's just a matter of really mastering that niche market. Whereas, my mistake was not recognizing how important it was to actually master these different markets. And I'm still nowhere near a master of, these are 7-8 counties we do in Chicago.
That's a big area.
7 counties in Philadelphia. We're in 9 counties in Atlanta. So I'm nowhere near even scratching the surface of mastery of those marketplaces. And I learn new things every day about every one of the, every one of the areas that we're currently in.
I know, I know. And you're absolutely right. I mean, real estate in general, as we know, is, just your core knowledge and exactness of, the details of that marketplace. And speaking of Baltimore, for example, I was actually a sort of a advisor, for lack of a better word, to a very large Blackstone related group was that had actually purchased assets in Baltimore. And going through the due diligence of what they had purchased and what they were planning to list, they were lacking in their knowledge in terms of what the deals were trading at. But the reality of it was there were other forces that were driving as to why they were listing their properties at a price that they were listing. And eventually they could not sustain, because, as you said, that knowing the exact marketplace and playing in that marketplace with respect to what the cost and what the characteristics are is really the key. And speaking of these various teams that you have, Dan, like what are the elements? Like, do you have like sources on the ground, or these like subcontractors or realtors? Like, how is your team? Can you give us some insight in terms of like how you build your teams in various marketplaces?
I have a vice president that's basically in charge of everything going on. It would be kind of a COO, if you will,
Mm-hmm.
operating officer on the ground in each market. And they run a team of acquisition managers. An
Mm-hmm.
acquisition manager would be responsible for face-to-face making a deal, being at the property, managing contractors, and basically running that deal, running point on that deal throughout the entire process with the insight, help, greater breadth of experience that the vice president typically brings to the table.
Sure.
And then, of course, with me, I mean, I look at every deal that comes in. I look at all, 15,000 plus leads that come in throughout the course of a year. I look at every single one, and I know what we're buying. I know if we're wholesaling something. I'm pricing every deal. I'm pricing it on the way in. It's the market knowledge that I've developed that I really try to leverage and make myself available for the team. So, like, as far as scaling, I feel as though I reach personally a little bit of a ceiling where it's like a certain place I can't seem to like duplicate myself wholly.
Sure.
And the vice president of the market and everybody, they all still spot the value too. But when like the 2 or 3 of us together hop on and look at it, oftentimes we're seeing some value there, and we're seeing like a calculated risk we could take. And it normally pays off with us making a profit, where at first glance, Sakar, it looks like no deal. It looks like it's a waste of time. It looks like we would lose money on the deal, but then, somewhere in there, I'm kind of like, no, we're going to trudge forward and take, I'd say that's fully 30 to 40% of the deals we do feel like at first glance, there's not a deal, but we make $15,000, $20,000, $25,000 sometimes from those kind of deals.
Wow. There's something to be said about, keep pushing on and, try being bold, and eventually it comes through. Very nice. Very nice. And I know, Dan, you have a great podcast, REI Diamonds Show, that I am personally a fan of and listen to the great interview experts that you have from time to time. So I would like to, highlight your show. Listeners should take advantage of REI Diamonds Show that Dan does, and he's been doing that for many years. So Dan, do you want to share some interesting insights you learned from your show over the years? Like, I know probably you have over the years, I know you probably have almost every reputed expert guest on your podcast. So would you mind sharing some stories and, what you learned over the years through your podcast?
Well, what I learned is I haven't had all the experts on because you haven't been on the show yet. But in seriousness, it's caused me to, like, I'm an avid listener of many, many podcasts and like variety. So sometimes you land on this guy, sometimes it's a business guy, a marketing. But to constantly be consuming information is important. For me, the ability to pay attention to what opinions I'm sharing on my show, what stories I'm sharing on my show, has helped me to maybe think about my business and basically my life in general in like a higher and higher way, because it's in a sense like people are watching. So I think it would be, key if someone's listening and doesn't have a podcast perhaps you could get the same level of like continuing to evolve from like, keeping a journal or having a mastermind group, or for us being in the business where we have all these different partners, this accountability to other people and these other partners has also helped me to grow. So I think, whether it's the podcast or whether it's elsewhere, I know that I benefited from, having partnerships with not just like-minded people, but like, different people with different approaches. And it's just helped to just produce a different way of thinking about everything. In addition to that, other lessons that learned from the podcast, it's really been like a mentorship program for me. The questions that I've had the opportunity to ask, I mean, people say like, when you get in the business of real estate, you should, call these guys and ask if you could pick their brain, or if you could take them out to coffee and ask them questions. And the podcast has given me a chance to do that and ask these questions of people like you're doing today. And then it's recorded and we share it with the audience. So in a sense, It's like, look, if you're listening to the show today and you're getting started, or you're early on, or you might even be like, further along in the game and don't have time to go meet people for coffee. And so I feel like these podcasts are like a great platform for kind of accomplishing some of that brain picking, and maybe even having somebody else do the question and answer for you kind of helps.
Right. Absolutely. Those are valuable lessons. Thank you, Dan. I appreciate it. And also, Dan, speaking about your business in general, like how your model has evolved, like you've done various strategies so far. So compared to what you were doing before as to what you do now, can you maybe share over the years, like how your models have evolved over the years?
Well, I always wanted to flip houses, Sakar, even when I was young. My dad bought a house when I was like 9 or 10 years old, and we were down there fixing it up together, and which comprised of like 10-year-old me whining about wanting to go home and play with my friends. So he did the math with me. So he described, he'd put 10,000, 15 in it, and he'd go to the bank. His payment was $150 a month. And he'd rent it out for $350 a month. And I was doing the paper out at the time and making like $25 for the whole month. And I'm like, wow, this is like the second or third house that he has. He's doing this. This is much better math. So I knew I wanted to do it then, and it took a long time to finally get it under. So I did. I flipped and, wholesaled, and never really had much of a strategy until about 2012, when we focused solely on becoming the source of deals. So like, I'm not sure about what your finances look like at the end of the day. You may not be in a position, Sakar, yourself, where you have to keep feeding the machine with deals. But I know people who are flipping houses, people who are trying to scale must become a source of deals. So whether that's broker relationships, whether that's, direct to seller advertising, whether that's, note buyer contacts, and you're on LinkedIn and you're developing contacts with these different asset managers throughout the country, but some way, shape, or form to position yourself to becoming like that source of deals and constantly like connecting and making them work has been like central to my strategy and my success. And then because of some of the risks we talked about in the marketplace, and we talked about the erosion of the wholesale business a little bit from competition, and also from, the market stopped going up. So we're seeing this like, kind of like leveling off a little bit. Also, we're seeing some of the iBuyers open doors, Zillow buying houses. So we have like this national new financial money coming into play where, wholesaling is getting squeezed from many angles. I've intentionally directed our team into flipping more and more of these houses and growing our contractor resources and just the general systems for that. And we're early on in that, Sakar. I would love to be at a position where we could have 50 or 100 houses under construction with, 15 crews, 10 crews in each city. We're not. We're lucky to have, I don't know, anywhere from 1 to 5 crews cooking in it, in our marketplace that are kind of dedicated for us. We may not even hit that level of scale. I really don't know, but it would be probably better because we're even on the deals we are wholesaling, some of them we would wholesale because the construction is a little too much for our teams. So rather than buy a property, keep it in inventory, wait 2 months to start construction or even a month, we'll wholesale it out and take, 20% of the total gross on that instead of, capturing the entire amount by pulling it through our machine. So yeah, the change in the business model really has been toward flipping the houses and adding more value and doing the deals the old fashioned way.
Right. Oh, well said, well said. And it's similar. What I have observed here also is that, I mean, personally, I'm pretty much a buy and hold person the whole career of my that I have had. But I have seen, obviously, as like as we all see our network of investors, what they do, and I have always observed that being a wholesaler, the sourcing of deals becomes a constant machine that you have to keep up with it, whether you're doing postcards, emails, as you said, establishing various relationship, that always has to continue. Whereas, I was pretty much a dual career, having my IT job that I was. So I'd never had, that much luxury that I could do, different deals, in terms of wholesaling and things like that. So I had always gravitated towards buy and hold. And eventually, as the portfolio grew, I kind of quit my job. And I mean, here we are after like owning a couple of hundred houses now. I've actually quit my job like 5 years ago. But as you said, I think that challenge is those gets interesting, that wholesaling. And I think even fix and flip has its own challenges, that sometimes you just have to identify the right projects. And as you said, sometimes it's better to wholesale the project and make less money rather than trying to eat the whole thing and sitting on that project for several months. I think there's something to be said there. So good. Thank you, Dan. I appreciate your time today. Please tell our listeners how they can get hold of you and any other interesting projects you may have coming up.
Cool. If anyone does want to check out some more, I actually wrote a book, and I don't really advertise this. I used to on my podcast. Oh, you could get the free book I wrote. But what I did was I put everything down in the business model, mostly around wholesaling back in 2013 or so. And I did this as like a roadmap or like an introductory, so that these business partners who I have today could read through that and get like a framework of my mindset when it came to wholesaling. So it's basically a wholesaling course I kind of give for free. It is in a PDF format. Sure. And if you check out the podcast, REI Diamonds.com, you can sign up for the email there. You won't see anything talking about it, but you will get the link in the email when you sign up. Nice. So if you want to check that out, if people have obviously deals or want to just say hello, there's a form on that site as well that I personally monitor and respond to. So you can always pop in there at reidiamonds.com and say hello.
Absolutely. Thank you. And we will link up your website in your show notes so that, all the audience can take advantage of it. And I appreciate your time today, Dan. It was a pleasure having you. And we'll look forward to, doing more and more interviews with you as time progresses. So thank you. I appreciate it.
Thanks, Sakar. Thanks to the listeners.
Thank you.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.